Okay, so now that looks like question 10 and 12. Okay, so which of the following sources of market efficiency would be most easily exploited? A stock price drop is suddenly due to a large block sale by an institution. Stock is overpriced because traders are restricted from short sales. Stocks are overvalued because investors are exuberant over increased productivity in the economy. Okay, so basically what happens is that like the easiest way to exploit it, okay, would actually be C. Stocks are overvalued because investors are exuberant over increased productivity in the economy. Okay, so let's say why wouldn't it be A? Okay, if the stock price drops suddenly due to a large block sale by institution, what happens is that often the institution would actually do this without letting anyone know. So this would almost be private information, right? So if you wanted to actually say, for example, short sell the stock, you would actually have to know that the institution was actually going to have a large block sale. So that would actually be quite hard to exploit. Okay, so if a stock is overpriced because traders restrict from short sales, usually what happens in order to have a short sales restriction, this has to be performed by a regulator or the exchange. So you also need to have insider information that the regulator is actually going to stop everyone from short selling a certain stock, and this is a very rare event. Okay, traditionally, exchanges are often like discouraged from actually restricting stocks from being short. So, right, so this is also very hard if an inefficiency to exploit because it doesn't happen often, and you need to know have private information. So the highest likelihood if stocks are overvalued because investors room over increased productivity in the economy is because this is actually not based on regulative restrictions or constraints to trading. And basically what happens is that it's just basically the market acting irrationally. Okay, this is actually because investors assume it's about the market acting irrationally. So what happens is that if you believe that they're overly exuberant and stocks are overvalued, you could just short sell these stocks. Okay, you can form a trading strategy to short sell from these stocks because you can profit from the mispricing because you believe they're overvalued and therefore you can exploit the inefficiency by these overvalued stocks and you will be helping to force the price at the correct price level. So this would be C, not A or B. A or B would require private information from a regulator or an institutional insider, which would be too hard. Okay, so then let's look at 12. Okay, suppose that after conducting an analysis of past stock prices, you come to the following observations, which would appear to contradict the weak form of the efficient market hypothesis. Explain. Okay, so what happens? You found that the average return is significantly greater than zero. Or you found that the correlation between the return during a given week and return during the following week is zero. One could have made superior returns by buying stock after a 10% rise in price and selling after 10% fall. One could have made higher than average capital gains by holding stocks with low dividend yields. Okay, so the first thing we're going to do is understand what is the weak form of the efficient hypothesis, market hypothesis, right? The weak form is really saying that historical data or just patterns is adequate to actually make a significant profit. Okay, so basically what happens is that if we said that the average rate of return is still greater than zero, like that's fine, that doesn't contradict the weak form. Okay, and basically, as mentioned before, if we even calculate daily returns, we'd find that it's above zero. Okay, but even greater than zero doesn't necessarily contradict the weak form of the efficient market hypothesis. So the correlation between the return during a given week and return during the following week is zero. So that doesn't contradict the weak form either, because there's nothing about the weak form which says that correlations have to be above above like zero, right? Okay, part C. One could have made superior returns by buying stock after a 10% rise in prices at 10% fall. Now, this is often a classic technical trading rule, which is a filter rule, which would actually contradict the weak form of the efficient market hypothesis. Okay, and part D, this wouldn't contradict the weak form hypothesis because you can make higher average returns by holding stocks with low dividend yields. So the answer here would be part C, because this corresponds to the filter rule. All right, classical technologies, which basically it says that every time it goes up in price, you can make superior returns. Every time you sell after 10%, you can actually make profits from there too. So the weak form, okay, is really about historical patterns, and this would actually contradict the weak form efficient market hypothesis. All right, so basically that's it for class 2, week 5. And there's not a lot, because a lot of it's theory, a lot of it would be discussion about how you guys would feel about, okay, how would you invest or trade before you understood the EMH, APT, and the CAPM, and how knowing this information would actually change the way you would invest. So what I'll probably do is that I'll have it on the discussion board for you guys to actually, type what your thoughts are to share with the class. All right, so thank you very much for watching the video. And hi everyone. So what I encourage you to do is definitely, as mentioned before, look at using the Sharpen app, download it on your phone, okay? Because what happens is that now that you're up to about week 5, the mid-semester is coming up soon. All right, so I think that all of you have learned enough such that you definitely want to be able to begin. I want all of you will actually should start to do some revision. Okay, so you've learned enough where you can start to do some revision, start testing yourselves, and start doing some revision, and start actually studying for the mid-semester exam as well. Okay, so please do download Sharpen, watch the videos, use the flashcards, do the quizzes, and also do the quizzes for the subject as well. Okay, and I'd really look forward to seeing all of you next week in person. And thank you all for being patient with watching these videos and doing collaborate. And it'll be really fun to actually start having these classes in person. See you next week. Thank you.